Renters need help. In the next 2 or 3 years, affordability is going to get much, much worse. For most people, renting is not a choice, but I believe it should be. In this video, I'm going to show you why renting is not a choice by just doing the math. In this chart, we're going to talk about population growth. So as you can see, the U.S. has been growing steadily year over year. At the bottom, you're going to see that the current growth of the United States was about 341 million people, which went up from the prior year of, let's call it, 339 million. When you do the math on this, you're going to see there was about a 1.8 million increase in population growth from 2022 to 2023. There should be no question to you that the U.S. has grown in population year over year, as shown in this chart. So why is this important? It's important because every single person that's added to an economy, of course, puts pressure on all the goods and services of that economy. So think of food, energy, schools, medical, and housing. All of those things have pressure put onto them as a result of population growth. Of course, there's all kinds of nuances inside of this data on where they live, how old they are, if they're young, if they're old, etc. But for the purposes of this video, I want to show you that the U.S. is steadily growing, and in this particular case, we added about 1.8 million people in 1 year. So now let's take a look at what happened to housing during that same period of time. And this chart, we're going to look at new privately owned housing units that were started year over year as it reflects during this 60-year period. Like most charts, you're going to see highs and lows, and the differences, of course, are going to be interest rates, inflation, and population growth, and all of those kinds of things. Should be of no surprise that each one of these downturns, there was always some kind of a recession. But what I really want you to pay attention to is on the right-hand side, starting at about 2007. I personally experienced the 2007 crash, and I'm going to share with you some of the reasons for it. It might be interesting to know that the average price of a home in 2007 was about $218,000. Inflation rate at that time was 3%, and interest rates were about 5.25%. Not too different from where we are right now, with the exception of the housing prices. So what happened right before 2007 is cheap money pushed the housing prices up until they peaked, and then they crashed. And then that line going straight down, that's when the banks started taking back on all the real estate. And of course, prices dropped during that period of time. The most important thing that I want you to see in this chart from 2007 moving forward is the lack of new construction and the lack of new housing supply that was added as a result that started in 2007. For the last 15 years, the United States has struggled to keep up with supply as pace with the population growth that we looked at in the prior chart. So it's a bit of a lag effect where in 2007 we had too much, and then it overcorrected, adding more supply, lowering the prices, and then it never fully recovered, and that's where we are today. So the last 15 to 16 years have resulted in almost no supply while the population of the U.S. has steadily grown, as we pointed out in the last chart, by 1.8 million just last year. So if you just do the math, you'll see that since 1957, the U.S. population has increased from 178 million to 341 million. And if housing starts had kept pace with the population growth, which they certainly have not, they would be about 3 million annually. But right now, we are about half of that level. Going back to the very basics of supply and demand, when population growth increases demand and the supply of housing is low, you're going to see higher housing prices, higher rent prices, etc. That's precisely the situation that we're in right now. But what we really need is we need new supply to keep up with the population demand, and that is the only way that we're going to see some stability in the rental prices and the housing prices in the United States. So there's article after article after article and white paper after white paper. I encourage you to go online and look this stuff up. But this is from CNN, Fannie Mae, NAR, or the National Association of Realtors, the NMHC, the National Apartment Association. We have a massive housing crisis, and the only solution is new supply. So the real question is, how do we solve this? Well, I can assure you that the government is going to focus on rent controls and things that they can do to the landlords and the people that own the housing already. And they're also going to put onerous restrictions on the new construction of building, which we're seeing right now. Things like zoning, making it really hard to build, or housing costs, or even interest rates. Those are the things that we need relief on in order to add new housing. So the opinions on the amount of housing that we need are all over the map, and they range from the National Multi-Housing Council, the National Apartment Association, the National Association of Home Builders, Fannie Mae, and the National Low-Income Housing Coalition. And based on the recent research of the NMHC and NAA, they found that the U.S. needs approximately 4.3 million apartment homes by 2035 just to stabilize. But what I really want you to focus on is the last sentence. That shortage means that there are too many competing for not enough apartments, which drive prices up. This is the issue. It's a supply problem because the demand, the population growth, is not going to stop. You're going to see that even the National Association of Home Builders said that they're 1.5 million single-family homes short, which of course is creating affordability problems on the single-family side. So I always like to say a coin has three sides. You have one side being a renter or somebody who's trying to buy a home, and you have the other side, of course, which is a homeowner or even a landlord. But standing on the edge, of course, is the ability to look at both sides. As an investor, where should you be? What does this mean if you're heavy in multifamily, single-family, residential, and where's the housing market going based on facts and logic and real math? The real problem we have is supply, and until supply is added, rents are going to continue to soar, and affordability will be further and further out of reach for many, many Americans. It's my belief that renting should be a choice, and home ownership should be in reach for everyone, and the government should be doing things like upzoning or allowing more units on one piece of land, or financial incentives like low interest rates or tax abatements. And specifically, we need to be focusing on low income and entry-level housing so that everyone can have the ability to make their own decisions on whether they want to rent as a choice or own as a choice.